Hello. Hello. Let me go ahead and make sure that you guys can hear. And then also mute myself so I don't hear you guys don't hear myself twice. Sorry about that. Like I said, less amateur. Not necessarily a professional, but less amateur. Yeah. All right. Thank you. It is good to be back here on Your Brand, Your Business. Let me know if you guys can hear Ernest. Okay, Ernest, please say hello to the wonderful people at home. You
Good to
guys
have you
cannot.
back,
There we
buddy.
go. Yeah, sorry, that was my fault. Mixer problems. Yeah. Okay, now we should be good. Still working on less amateur. Excuse me while I get the rust out of my system. We did do one special show last week. Was that Wednesday?
Um, it was yes, it was Wednesday. Yep.
Yes, Wednesday. So all of you at home, you should feel extra special because you're getting 2 doses of Ernest Jones CPA in less than 1 week during his premium billable season, which is tax season right now.
Yeah,
Right.
and unfortunately, Galen can't join us today. If you remember the last broadcast and you were here, you know that his computer has completely melted down, and it's just a pool of circuit boards now.
Yeah, and I like to rip on Galen anyway. This is Your Brand, Your Business. This is a show that Galen and I had started a while ago, and then I had to, because of changes in my own personal individual schedule, I had to drop out, which Ernest has wonderfully and so graciously decided to become a second co-host. We are excited to say that because of my changes again in my individual schedule, we will now have a cast of 3 rotating hosts: myself, Ernest, and Galen, along with guests that we can bring on who are other professionals in the industry. As you guys can figure out by now, Ernest Jones is a CPA, Galen is a financial planner, I am a business and tax attorney. And we all have a deep passion for working with content creators to help them to do more behind the scenes. We help them to take care of their business and legal issues so that they can focus on the entertainment and the content creation, which Galen, Ernest, and I are not as talented as. So that is why amateur streamers, professionals. If you want, am I allowed to say that? Yeah,
Yeah,
we
I
went
think
to
so.
yeah we went to
I,
school
I,
long enough for that.
yeah, I'm waiting for someone to take me up on just discussing comic book stuff on a podcast and be the first one in that field, right? Because I don't think there are any other ones.
No, I don't think there are. Um,
Okay,
yeah, you.
okay, Joe.
Okay, all right.
Um,
But go ahead. Let me. If you'll notice in the title, this is a continuation or continued. So let me go ahead and find the link now for the previous one, which we did on Wednesday. Yes, Wednesday. We did it on Wednesday, and let me go ahead and find the link so that I can share it here. This is a video that you guys can go ahead and watch. It's a. I actually did go ahead and highlighted the portion of the show that was just them because I did spend a bit of the pre-show working on a tax calculator, which we're going to be continuing in today's episode right now, shortly after this. But what I just linked, that highlight is the actual show that had myself, Galen, and Ernest all talking about the 3 different perspectives when it comes to tax preparation. But this was basically if you had come to either one of us and said, I've never filed taxes before ever in my life, and this is a good point to make a disclaimer, this is for U.S. residents and citizens dealing with U.S. taxes, right? Because we're all licensed professionals within the United States. However, if you had come to one of us and said, I've never filed taxes before, I don't know what I'm doing, I don't want to get hit by penalties or whatever, what can I do? In that episode that I just linked, we walked you through from the very beginning to the very end on how you would go about preparing for your tax return. What we have now also, and actually let me just go ahead and switch to that scene right now. This is a tax calculator that we were working on during the show. It's basically a spreadsheet based off of tools that I got from Galen and Ernest to help you as a sole proprietor or as a disregarded entity, which meaning if you I saw someone mentioning an LLC earlier, so if you had a pass-through entity or anything else like that, these are the steps that you would go through. The first step is to figure out your own business's tax. So we call this freelance Twitch person because it's not just a content creator, but it's also self-employed individuals such as emote artists, graphic designers, video editors, community managers, if you are getting compensated, moderators, anything else like that, that you are a freelance Twitch person, let's just call it FTP. What you do for your individual return is first you figure out your FTP net profit or loss. This is step one. That then gets passed into step two, which is your personal return. And Ernest, anybody else in chat, also feel free to stop me as I'm going through chat, or as I'm going through the recap if there's something that I missed or misspoke or added. I think I'm having chat issues right now, so if you do see anything in chat that I might miss, please go ahead and shout that out also. So step one, FTP net profit or loss, or FTP business net profit or loss, and then step two, FTP personal or individual income. And then that's when you determine your tax liability. Ernest, why don't you give a quick summary on what do we mean as a pass-through entity or as a sole proprietor or self-employed individual?
Sure. And so one thing, couple disclaimers is if you're going to pose a question in chat, make sure it's not specific to your situation. And by that, I mean, don't post your social, don't post anything, super identifying. And all of this is going to be kind of general in nature and educational in purpose, meaning this isn't direct advice to you, Twitch chat, 420 blaze it. Okay. This is, general advice for you to apply to your, your situation. And the other thing is we're going to try to get through a lot today, but reference that video that Joel linked in the chat because we went up. How long did we go, Joel? Like 90 minutes, and you had your pre-show?
Yeah, so we went about 90 minutes, and then plus my pre-show for about an hour. So in total, I think we had almost 3 hours of content.
And then I think sometime last week I did a True Gaming podcast too on their channel that was strictly about taxes as well. I tweeted, but I alluded to this. This is the most popular time of year for me because this is the time where everyone wants to talk to me, as opposed to after tax season and no one cares I exist. So I'm the prettiest person at the bar right now, Joel.
It's nice to be the prettiest person at the bar.
It's nice to be the prettiest person at the bar. You get all the free drinks. So specifically, let's talk a few things about what Joel alluded to. And let me bring up that question again. The difference between a pass-through entity or a sole prop is this. And you could have an LLC. Oops, let me mute that. Sorry. So specifically with pass-through entities, you're filing that on a separate return. So let's say you, freelance Twitch person, have set up an LLC and elected for that to be treated differently for tax purposes. What that means is you're filing a separate tax return for that activity, and then that's going to flow through. That's why it's called as a flow-through entity to your personal return. It doesn't actually pay. It doesn't actually pay tax. Now, the other thing is with a sole prop, it's kind of the same concept, except it's reported on your personal return. There's a supplemental schedule known as a Schedule C, and Schedule C is a schedule that reports the activity from your business venture. Again, whether you're a video editor, broadcaster, a writer, artist, or you wear all those hats or some combination thereof, and that flows through to it rolls up to other forms as part of your personal filing. Yeah, so someone in the chat just said Schedule C is wrecked this year. So I'm going to do this rant every year, or every time we do the show and this comes up. I hate the new way the forms look. To me, professional opinion, they kind of changed the way needlessly. They could have gone about it a much simpler way because 99.9% of the tax filing population use some sort of software to file their returns. Every once in a while, someone will come to me with a handwritten filed tax return, and it's a bit like seeing a unicorn in the wild because you're like, you actually filed this, and they'll say yes. So,
yeah.
Oh, go ahead, Joel.
No, I was just gonna say, chat's about to trigger Ernest because they're talking about new Schedule Cs and new 1040s, which that is. Yes, I think we've neglected to mention. I know we talked about it a lot in the previous show, but we neglected to mention at the beginning of this one, 2018, the calendar year or this season is unique in that 2018 is the first calendar year that the new tax reform took effect. Right, so the Tax Cut and Jobs Act was passed in the late 2017. First calendar year that takes effect is 2018. The first time you file for 2018 taxes is now, which is spring of 2019, specifically due date of April 15th, 2019. So the 1040, which is the name of the form that everyone uses to file an individual tax return, right? Whether that's depending on your filing status, whether you're filing single, whether you're filing jointly, head of household, married but filing separately, right? Is that everything? Just those four?
The four filing statuses are single, married filing joint, married filing separate, and head of household. Yes, you nailed them all. So I have to go through them in my head to make sure we don't miss any.
All right. So for the vast majority of Twitch, you are going to be filing either single, married filing jointly, or head of household, right? So married filing separate is one that is very rarely used. Is that correct? I'm pretty sure I could say that.
So when you say those statements, I'm always like, it depends because Joel, you're here, so I've got to bring back the catchphrase. We're bringing it back, right? What's old is new again. It depends on kind of how you slice the data. If you take the tax filing population as a whole, most people do not itemize. And if you look at it, most people actually just have a W-2. Right? If you look at the tax filing population as a whole, for those that don't know, a W-2 is the tax form you get at the end of the year that shows your employment income. So when you actually work for a company or work for someone, they'll issue you a W-2. So kind of when I look at my bread and butter, kind of people who engage me, it's people who either have a business where it is very complicated for them and it makes more sense to hire me, or they're itemizing and they want to make sure they're covered. So, all of my clients fall into those two categories, right? If you have a simple W-2, you probably don't need to hire a professional. You can kind of do a free filing service to handle that. That's my perspective on kind of the itemization issue. In fact, I was just working on a return where this is a slight tangent. The standard deductions increased with the new law. Mm-hmm. And so if you're single, it's 12,000. And if you're married, it's 24. I was working on a return before we went live where I'm trying to get it over that threshold. And they're kind of what I would consider a standard couple. Married, they own a home, and we're struggling to get over the 24,000. I think we'll get over it just barely with charity and some other things. But for the most part, I don't think we're going to see a lot of people itemizing anymore. The stat was 67% of filers don't itemize, and I think that's going to increase to 80% is kind of the studies I've seen.
Yeah, and then if I recall correctly, typically whenever you would choose to actually file married filing separately was because one person was better off itemizing a lot and the other person was better off taking the standard. And then it kind of got watered down.
Here's the thing. Yeah. Well, here's the interesting thing, Joel. See, a lot of people say that, but here's the issue. And I love this because I get this question all the time from my married couples. Is that if one spouse itemizes, the other one is required to itemize. So you're not allowed to double dip.
Okay.
So in other words, you can't take the standard as spouse one and then spouse two itemizes. So it's kind of both feet are in the bucket or neither are.
I mean, but then that's why they do married filing separately. Or is that you're saying that even if I was doing married filing separate, if spouse one did the standard, spouse one had to do standard?
Yeah. So, okay. Yeah. In other words, if you're doing married filing separate, you can't do that. You can't have one itemized and the other not.
Okay.
Typically, it usually doesn't make sense for people to do married filing separate. Typically, you only want to do that if there's legal reasons, potentially a divorce.
Yeah.
And you want to kind of keep it separate.
Yeah, that was the probably the go-to example. You're in the middle of a divorce, and then you're not, the divorce isn't finalized, and that's why you file married filing separately. Anyway, that was a pretty long tangent, but it is safe to say that that was just kind of covering the bases for all of the different filing statuses. Vast majority of FTP, yeah, freelance Twitch people will be filing as either single, assuming you're not married, married filing jointly if you have if you are married and you're filing together with your spouse, or head of household, you are single and you have dependents that live with you. So those are the statuses, or the filing status, that you really need to be concerned with. But let's just go ahead and assume for today's example of we're doing the walkthrough that you FTP are filing single. Okay, so as you are filing single, when it comes to self-employed, and really you see this quite often now, especially not just on Twitch and content creation, but also within the greater freelance gig economy that we currently reside in, you'll see a lot of people who are operating as independent contractors rather than W-2 employees. Ernest talked about it a little bit earlier, but the key difference between a W-2 employee and an independent contractor is that on one hand, you are an employee, the company is taking out taxes for you, both income tax, they're withholding income taxes, and that's what leads to a refund later, and they're taking out the what we call the FICA taxes, which are Medicaid, Medicare, Social Security, all that kind of stuff.
Also known as payroll taxes or self-employment taxes.
Exactly, right. So just to, we'll call it payroll taxes because to avoid that confusion, right? So they're withholding income taxes on your behalf, meaning they're taking out and collecting it for the government. But the main thing is they're paying half of your payroll taxes. You pay, what is it, 15.6, right? 7.3?
7.65.
So 15
on each side, yeah.
7.65. So
15.3.
Yeah.
Yeah, 15.3.
Yeah. So 15.3, meaning they are paying 7.65 of that Social Security, Medicare, Medicaid tax for you, and then you're paying the other 7.65%, and that's why you get a gross pay, and then at the end of the day you have your net paycheck, and everyone's like, whoa, who the heck is FICA? Why are they taking all my money, right? So that's why they're taking all your money. Here's the biggest thing. As a W-2 employee, they take all your money, but that's all handled for you, right? You file for a refund later, and then that's when you get the money back because you had overpaid in taxes. We can talk about that a little bit later. As a FTP, or as a freelance individual, as an independent contractor, nobody is taking care of that for you. All you have is income or revenue that you have to pay both income tax on and payroll tax, and you have to pay the full 15.3%. Nobody is holding half of that for you. So a lot of people, there's some misinformation out there saying that if you made less than $12,000 a year, you don't have to file income taxes, or you don't have to file a return. That is a big loaded statement, because that's assuming you are a W-2 employee, and only a W-2 employee, and your overall
no other forms of income.
No other forms of income.
And the burden that you're alluding to, Joel, is kind of the burden of being having a business.
Yes.
Right? That's why this show exists, right? Yeah. The burden of having a business is this extra filing requirement, these additional administrative things that you have to deal with. So we looked it up on the show because I couldn't remember. I knew it was low.
Yeah.
The IRS technical guidance on if you are a self-employed individual or you have any self-employed income is $400.
Yes.
Which is lower than the 1099 requirement of $600. So in other words, if you earned $400 doing commissioned artwork or a writing gig, and that was it, technically you would still have to find a return or file a return, excuse me. Now, something common that I get asked, that you get asked too, Joel, is, well, I have expenses that offset that. I'm in a loss position. I only made $400. Why do I have to file? And we talked about it. And do you remember why they have to file, Joel? I'll let you take it.
If they want to get a return, they have to file. And otherwise,
they don't. The IRS is not going to have your expense information. Yep. So you may have made, say you get a 1099 for $1,000, but between, supplies and setup and commissions that, for overlays or what have you, you're in a loss position. The IRS doesn't have that information. So
Yeah.
they're going to see that a 1099 was issued to you, but they're not going to have any of the data that offsets that and actually shows the loss. So that's why you need to file.
Yeah, and we're in kind of like it's a little bit timely given that, there was some news about Twitch reporting incorrect 1099s, right? Or issuing incorrect 1099s, and now there's a delay because they had to go back and fix all that. But here's the thing. They sent the forms to the IRS, right? They will later send the same exact form with a checkbox marked corrected or amended. Yeah,
Correct.
right?
Yeah.
So
I was talking to someone
yeah,
this morning. They said they think theirs is off 20,000.
that's crazy.
I don't know what I'm guessing it's a system error and something didn't pull from somewhere when they kind of aggregated the data.
Yeah, I'm sure it's something that was like part of the automation process was messed up somewhere. Either way, the IRS will eventually get notified of a corrected 1099. However, assuming, let's just say, for one reason or another, a company never actually got around to filing that corrected 1099, you're still on the hook to prove that it was incorrect or that it was there was something wrong with it, or there's some reconciliation that needed to be made, or they're only issuing the gross amount. And like Ernest mentioned, you have to show that that is the gross amount. You have certain expenses, and then those expenses later, maybe you do fall under that $400 threshold, so that you don't have to pay any self-employed income, or that you didn't actually have. Sorry, you would still have to pay self-employed income, right? Self-employed taxes. Sorry, but if you were under that amount, maybe you wouldn't have had to file or anything else like that. So what we're saying to you now is that always, always, always be prepared to file a return. It's better to be prepared and then not actually have to do it than not do it and then find out you actually had to. We talked about the statute of limitations previously on our show about the IRS being able to come back, whether that's 3 years for which is any return, right?
Correct.
3 years for any return, 7 years for what was the term you used? Like
Fraudulent.
Significantly, yeah.
Not fraudulent.
Yeah.
A significantly misstated tax return.
Yep. So 7 years for a significantly misstated tax return, meaning you severely understated or overstated. And then if you were just plain fraudulent with your tax filing, they have forever to do it.
And the key thing is that if you talk to any professional that files taxes or kind of is adjacent to it, we always advocate filing a return for this very reason, because the statute does not start until you actually file the return, meaning that 3-year clock, that 7-year clock doesn't start until we actually have a position on file with the agency. Mm-hmm. So that's why, it's important to file.
Yes. Right. So now that we've kind of gone a little heavy, and again, you could watch that video. Let me go ahead and post it again. You can go ahead and watch that video to recap. We talk about this in greater detail, also with Galen's input. But back to this tax calculator, this tool, the point of this is this first, or I guess it's technically the second, but this first worksheet, this worksheet right now is, if you can't, they cannot see it because, let me go ahead.
They can see it?
They can see it, but they can't see the tabs. There we go.
Oh, gotcha.
Yeah.
So while you're kind of resizing that, the key thing is when it's kind of a step-by-step process. So what I would say when you're prepping your taxes, I would say, number one is identifying everywhere you earned money, especially if, this is geared towards people who are entrepreneurs and self-starters, meaning you kind of see how Joel's laid this out. There's a 1099 from Twitch. There's a 1099 from DBH. There's a 1099K from PayPal. So in this, what he's doing is he's identifying all of his forms of income, and he's also identifying kind of the tax form associated with it, and who or what business it originated from, right? So you kind of see those notes on there. So that's a good first step. Is you're kind of showing, look, I know I made, say $10,000, and it came from here, 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 and here, and these are the tax forms that support it. I didn't get a tax form for this one, and now I've got a global look at kind of where I made money and how much I made.
And so this is basically, it's like a checklist, right? So what we tried to do was make a spreadsheet that doubles as a checklist to help you figure out and locate and record keep all of the relevant data, right? So the first thing that you do is and we mentioned it in our show, but be aggressive in your inclusion of your income. So even if you didn't get a form for it, right? So the 1099 reporting threshold is $600 for most people. Even if you, let's say I hired Ernest and I only had to pay him $500, so I don't actually have to issue a 1099 for him. That is still income that Ernest has to report. He would have to include that here under other income. And this is just this was a copy pasted really just from over here, but let's just say this would be something else. It won't be a 1099K. We'll just call it other income, right? So this would be source John Smith, right? And then this was $100. This, they received it through PayPal, or we could say we received it through a check, and the income was for, let's just say, commission, right? Okay.
So two things.
Yeah.
You hit on something. Even if you don't get a tax document, the burden is on you to still report those earnings. So no tax. Now that I've heard, like, well, how would the IRS catch it? You're right. It would be very difficult for them to catch it. But legally, to be compliant with the laws of the United States, you're supposed to report all of your income, whether or not you got a tax document. And number two, Joel, a check, really? When was the last time you cut a check? A personal check?
I did. Not a personal check, a company check. Yeah.
Okay.
I cut them all the time.
Really?
Yeah. Well,
wow.
I mean, I'm also a corporate officer for a business that is much more geographic based, right? Not online based. So we have local vendors and everything else like that. But I cut checks all the time. Yeah. But yeah, no, this is a very fair point. So for you out in FTP world, meaning freelance Twitch world, it might not be a check. It'll probably be like maybe an e-check, maybe a PayPal transfer, electronic money transfer, ETF, anything else like that. That still counts. The key thing here isn't how you received the money, but what was the money used for, right? So Local works with graphic designers all the time. She probably just sends it via PayPal or via electronic funds transfer, EFT. So, but then either way, those graphic designers still need to be reporting that income if it was for a commission, and they're doing that as a business activity.
And something to note as a kind of a learning point, if you're a broadcaster, you're supposed to issue 1099s to people you contract with if you pay them $600 or more.
Yeah.
However, if you pay them through PayPal, which is a merchant service account, kind of a credit card processor essentially, you do not have to issue them a 1099 in that circumstance. It's a little known rule. And so, for example, if you are a broadcaster and you deposit your Twitch subs, bits, and ad share into your PayPal account, technically they should not be issuing you a 1099. And I go on this. This is something I hit on often, very quickly. Let's say PayPal, you collect $5,000 and your Twitch earnings are $2,500. Well, what that means is if Twitch issues you the 1099 and you get a tax document from PayPal, you end up with the way it looks to the IRS is you've actually collected $7,500, when in actuality it's only $5,000, right? Because the Twitch portion of that is included in that $5,000. Yeah. So when you're filling out your taxes, you want to make sure that you are kind of writing it up to that $7,500 and then backing off that excess reported amount. That way you're matchmaking to the IRS system and you're kind of not paying more tax than you should. Yeah. It's a kind of a key thing that I see across all broadcasters.
Yeah, and we see this a lot, so it's worth hammering because we've talked about this a lot, but we've also it's worth hammering because we see it a lot. Please, please, please don't issue your Twitch money or Twitch payments into your PayPal. I know a lot of you out there prefer to use PayPal like a checking account. PayPal's primary primary purpose is not as a bank or a checking account. Its primary purpose is to be a recipient of, I should close that so you guys aren't seeing it, is to be a recipient of electronic funds, right? There are actual online or like internet only bank accounts that you can use, and I would suggest you use instead of PayPal, because what you're doing is basically you're fudging with the reporting. You're fudging with the actual legal reporting, because PayPal is going to issue you a 1099K, which is a 1099K is very different than a 1099 miscellaneous, even though their names are very similar. A 1099 miscellaneous is supposed to report on income. A 1099K is only supposed to report on all merchant transactions or financial transactions. The threshold is what, $20,000 and 200, or is it or 200?
The 1099K requirement is both. So it's the 20K in amounts in and 250 transactions.
They upped it to 250.
Is it? I think it's 250. I'm gonna look it up real quick.
Okay. So if you have more than $20,000 and more than 200 transactions, then you are getting issued a 1099K, right? But that doesn't. A 1099K isn't indicative of income. It's indicative of how many transactions you had, which often is a starting base for income. But if you're bundling your Twitch payment into PayPal, you're essentially throwing your 1099 miscellaneous into the reporting for the 1099K, and then now you're double dipping in a bad way, as Ernest had mentioned before. So please do not use your PayPal like a checking account. Get an actual bank, whether that's a brick and mortar bank or an online bank, and use that as a checking account rather than using your 1099K. Or using
we're talking best practice, right? Yes. So ideally, if you're talking, someone came to me and they were saying, okay, look, how should I structure all of this in terms of kind of healthy, administrative, running broadcast for the accounting side of it? I would say there would be a separate bank account for kind of those funds. There would be the PayPal account, and there would either be a credit card or that same bank account with a debit card. And that's where 99.9% of all of the business transactions would flow. So whether you're at TwitchCon, you're booking your flight to TwitchCon, you're at PAX East or West, and you're getting, drinks or shots, and you're networking, you're paying someone for art, you're paying a video editor. All that is centrally housed away from your personal expenses. So you go on a personal trip, you part of your rent, those things should be separated in a separate account, because the idea is you want to have the separation of church and state between business activity and personal activity, because when you commingle that activity, your burden of documentation and record keeping has to be even higher when you commingle.
Yeah.
And so someone Buddy Mash just asked, is this, if you're a business, if you haven't broken it off enough to be an LLC? No, this applies to, so there's the practical advice and the technical advice.
Yeah.
Yes, you should break out everything at all times. That's the best practice. But the practical side of it, if you're just getting started, or this is very young and it's in its infancy, and you have, maybe 5,000, not a lot of activity on the streaming side of it. Yeah, I get it. You're not going to want to do this. If you're someone that's, huge on the platform and you're pulling in hundreds of thousands, yeah, I'm going to be yelling at you. You really need to be breaking this out.
Well, and I think this is where you're going to get two different perspectives, because as an accountant, Ernest's perspective is definitely strictly numbers, right? So does it make dollars and cents, right? My perspective as an attorney is going to include liability issues and everything else, right? Peace of mind issues. My advice is that, it's important to point out what we're saying about separate accounts for everything. That isn't only if you have an LLC. You can be a sole proprietor and have a business account for your business and a personal account for your personal things, right? So you don't have to have a separate legal entity to open a business account, to open a business credit card, or even to open a business PayPal, right? Have separate email accounts, right? You have a personal email and you have a business email, and you can do all of those other things still on the business side, even as a sole proprietor or as a partnership. You don't have to have a separate legal entity. Don't commingle those things, because it makes things more complicated, not only from should you get audited and you have to prove things to the IRS, but it also makes things more complicated from your own personal bookkeeping, your own individual bookkeeping perspective. You have to go through your statement, highlight which ones are for your business, which ones are for your personal, right? If you're like a lot of people, you don't do that until the end of the calendar year, when you may not remember a transaction from January and whether that was personal or business or what it was actually for. Chances of you making a mistake when it comes to commingling are much higher. That is why, from a legal perspective and an accounting perspective and just a overall best practices for a business perspective, separate everything else as you can. And you don't have to wait until you are in a position where you can form an LLC to do that. This spreadsheet here is to kind of help with that a little bit if you do commingle or whatnot, especially this tab right here, the business expenses tab, right? So this is, we went ahead and found all of the different expenses that are common to you as a FTP, and where go ahead, and then these are for if you had your actual transactions, you can kind of import them from your bank account, from your PayPal, from your credit card statement, whatever, and then put them in here, find the correct category for that, and then it'll tabulate all of them and summarize all of them for you right here, right? So we won't spend the time to go over these individually because we did that in the episode. So go ahead and go check out the episode to see that. But these are the expense categories that we have. These are the allowed expenses. And what we will discuss is what is an actual allowed expense. What are the criteria for an allowed expense, Ernest?
Okay, so standard pitch here. It's impossible for the IRS to define what a valid business expense is for every business that has existed, currently exists, and will exist in the future. So look back 7 years, I think Justin TV was still a thing and Twitch hadn't really launched yet, I think is the timeline. I always get it wrong by a year or two. Think of all the businesses that are new, in the past 30 years, right? You have software developers. Well, that's a whole new industry. And so there are specific rules for that. So kind of the case law on this is a two-pronged test that has stood the test of time for I think now we're up like 70 years. It's like 1950s, 1940s. Is for something to be valid, it has to be considered ordinary and necessary. The way I explain it is it's not the clinical definition of those words. Is it helpful to your business, and is it common in the industry? So one question we get all the time, and I had someone just the other day say, like, really, I can write those off? I can expense that? Are subs to other streamers. And why do we say that we think you can write those off, Joel?
Because they are ordinary, meaning most people do that within this industry, right? It's not uncommon for a streamer to sub to another streamer as a form of networking, as a form of business development, what have you. That's ordinary, meaning everyone does it. It's common practice, and it's necessary because you have to promote yourself and network as part of developing your own brand. Necessary, it's important to point out here, necessary does not mean required, right? It does not mean mandatory. Correct. For Ernest and myself, we have mandatory license fees. We cannot not pay them, otherwise we lose our license to practice. But at the same time, we have volunteer bar associations for me, and then I'm sure there's also volunteer trade associations for you that you can Correct. Join, and those are not required, but they are necessary as part of our practice.
And the other thing we get a lot is kind of, this is what they're asking, but they don't know they're asking it. If I make a bad business decision and I spend something that I think would be good for me and my business, and it ends up causing, a huge loss, does that mean that I can't write off that expense? No, that's not what that means. People, hopefully you don't, hopefully everyone, makes great business decision, makes money hands over fist, and then they can hire Joel and me. But, if you make a bad business decision and it causes a loss for the business, that's okay. You still get to write the expense off.
Yeah, I'd actually argue if you made a bad business decision, you might want to hire us even if you can't necessarily afford it, because should you have to defend that bad business decision when the IRS comes auditing, then you'll need one of us.
Yeah, that's true. That's a fair point. Yeah. So yeah, I mean, that's some of the common questions we get. I'll say on voice is that if you have questions regarding, anything, feel free to put them in the chat again, make them kind of general in nature, not specific, not specific to you. You don't want to, dox yourself accidentally.
Yeah.
And so the other thing is you may have expenses that are outside of these general guidelines that kind of, that I put together, that Joel put together, that even Galen's put together because of some of the uniqueness of your broadcast, right? Everyone's different. Everyone's facts and circumstances may be different, right? These are very broad categories And so, when I give my template to people, I say, look, if there's something you're not sure about, drop an extra row and call it out specifically, and we can discuss it and find out, what those expenses are. You may do something like, like a sub incentive, and you may end up buying like gardening equipment or something, and it may be something in your backyard, or like some off the wall thing that was a one-time expense, but it's definitely related to your stream, or it's definitely related to something you're doing. And so I think that would be a business expense.
Yeah. I'm just working on, because this is still a work in progress tax calculator. But we will make this finished. I will finish this and make this available to everybody. But what I'm doing right now is just kind of inserting and creating that catch-all category, the other expenses category. This will be for, like we mentioned earlier, the key test is whether it's ordinary and necessary. And actually, Ernest, if you want to go ahead and, I remember there was actually a pretty helpful page from the IRS describing what that test was.
Sure. Let me find that.
I'm just going to, so we can kind of post that link, because I believe they actually give examples too, and explain in case, this is the age where you should always double check the information you hear online, right? And this is a little bit of a tangent, but this applies also to Ernest and myself. We've went through a lot of school to kind of get this information, but that doesn't mean that you should just believe us because we said it. It is worthwhile to go ahead and fact checked on your own, especially what everyone says in chat also. We get this headache all the time because people will say something on social media and then they actually didn't know what they were talking about. Just like the home office thing, right? If you're an actual employee but then you work from home or something like that. So there was a lot of misinformation out there when the first tax reform stuff was getting announced. Always double
people
check.
thought as independent contractors that they were not able to deduct their expenses anymore, which wasn't true. They were carving. There's a difference between a business expense and an itemized deduction, because you pay tax on kind of your net earnings. So the net earnings would be, the revenue less the expenses. So, if you have to spend $1,000 to make 2,000, you're not going to get taxed on 2,000. You're going to get taxed on the 1,000. Now, the itemized deduction piece, that piece is incentives that the government has made, so you aren't paying tax for it. So as an example, for the longest time, we've incentivized home ownership, right? And we've incentivized that through one of the biggest deductions that gets people over the hump. And that is the 24,000 threshold now, right? If you own a home, you're paying mortgage interest, and that's a deduction, right? And that's ways to lower your income to get to a lower taxable income number, therefore, so you can pay less tax. And so that was a huge thing. I remember, Joel, you probably remember too, right? Like at December 2017 into January 2018, just broadcaster after broadcaster saying like, wait, we can't write this off anymore. Yeah. Wait, we can't write this off anymore. What do you mean? That's crazy.
Yeah.
Check.
There was a lot of misinformation at that time. Sorry, while Ernest is talking and posting helpful links, I'm going ahead and just kind of doing some of this formulation, which will kind of give you hopefully a better picture of what the purpose of this spreadsheet is. So right now, this is a summary tab here. So then we have gross income, and then we also have expenses, right? So total expenses. I'm actually looking at Schedule C right now to kind of use the same terminology to kind of keep things as similar as possible.
And as you're doing that, the key thing is a lot of those categories in that other tab and that I provide are roll-ups. Yeah. And by roll-ups, I mean not fruit roll-ups, but ways to consolidate expenses that you pay into a single category. So you don't, I was doing a return for someone way back when, and what they would do is they would like break out almost every single game purchase that they had. And so they
Oh
purchased
man.
like 50 games, and it would be
Yeah.
like this game $20, this game $50, this micro, blah blah blah, and it would go down the list. And we talked about this on the other show, but there is an art to preparing taxes, and it's not, I'm not saying that we're being sly here, but you don't want to provide more information than you need to.
Yeah. Actually, here, let me go
Uh,
ahead and this is Schedule C. This is 2018 Schedule C, so you can actually see what we're talking about here, right? The IRS isn't giving you space to list out every single thing. They don't need to see advertising and then you list out the 50 different Twitch subscriptions that you had, right? They don't want to see that. They just want to see a
yep.
number. There is a space, or there used to be a space actually, when you could include other expenses and then
Yeah, if you
attach.
scroll down a little bit, Joel.
Yeah.
So it's in line 27A there.
Yeah. Other
And then if you
expenses.
scroll
right?
down, there's a breakout for other expenses.
Yeah. These are just business expenses not included on lines 8 through 26 or line 30, right? And you can add other sheets if you want to, but the more paperwork you add in, the more information you're volunteering for the IRS isn't necessarily the better. In fact, most of the time you're not helping your own case, right?
I have to step away just for a second, Joel.
Yeah.
My girlfriend just got back from traveling and she doesn't have a key to the place. I'll be
No,
right
no
back.
worries. Yeah. So what we're saying is these are the categories that are available, right? So these are a lot more categories than the ones that I have listed here on the spreadsheet, right? So going back to this one, you have accounting, advertising, auto expenses, all that kind of stuff. So there's a lot of stuff here that's not even listed. Like for example, depletion or depreciation, right? So what I tried to do in making this spreadsheet is to make it more as easy as possible for streamers to use, because a lot of times you won't have to worry about depletion or depreciation in section 179 expenses, or have to worry about pension and profit sharing plans. You're not going to have to worry about that for 99% of the FTP people out there, right? So you can see there are a lot more expenses available and allowed for a profit or loss from a business. This is a sole proprietorship. Schedule E is what? That's the form for if you are a partnership.
Page 1 is for rental activity, and
Yeah.
page 2 is for flow-through entities. So that's where the K1s gets reported.
Yeah, so that's like, let's say you are an actual, I'm trying to think of when a streamer would actually have to file using a partnership return.
If you set up an entity and you had a foreign owner in it, because foreign owners can't be part of an S corporation.
Mm-hmm.
But also, though, page 2 includes the S corporation K1 as well. So anything that comes from a flow through is on page 2.
Yeah.
And then we have a question in chat, and I'm not sure I understand from I Am Flip. So it says, considering the reduction of Schedule C usage, wouldn't that mean that the IRS will have more time to check stuff and increase the chances someone can get audited? I disagree with the premise of the question, because I don't think you're going to see a reduction of Schedule C usage. Yeah. I would think as the gig economy progresses, I don't know if we've even hit a saturation point with it, but I would say that you're only going to see an increase in Schedule C usage for people. I think because so many people have second jobs now that they're not employees of.
Yeah. And so we actually talked about this a little bit in the show. We're just going to call you the hybrid FTP. So you do streaming or you do freelance Twitch stuff on the side. You also have a day job where you're a W-2. That doesn't mean you don't have to file a Schedule C for your Twitch stuff. As long as it's an activity where you're trying to earn profit and you're trying to have income, or, if you're being prudent and you actually want to use your side gig, let's say you do have a loss from it to offset some of your tax liability from your day job, that's something you can do also, but you have to file a Schedule C. What Congress's intent, or whatever this administration's intent was, we're not going to get into politics, but their hope was that they were going to make the 1040 much simpler, because it can all fit on a postcard now, and that they assumed that just by shrinking the paper size, that made the actual filing easier. That is definitely not the case. There was no change whatsoever for people who are self-employed or freelance individuals or sole proprietors or business owners. In fact, if anything, their returns got more complicated by the introduction of a possible business income deduction, right? And the freaking acrobatic math calculations that are needed for that deduction. Which
I can send you a flow chart for it real quick.
I haven't seen any good flow charts, and I think we're just going to be like taking up we're just gonna. I think people might be confused already by adding that. You're just confusing everybody because I've been in continuing legal education seminars where they were trying to go over that deduction, and you're talking to a room full of attorneys, and there was still just a handful that understood what was going on. Yeah.
I hammered it when it got passed, so I feel pretty comfortable with it.
Yeah.
I did find it funny that there's an option in my software to just say, no, we're not making it eligible for it. Like you just completely just punt it and be like, fine, you can take the extra money. I don't care, which is really nice.
Yeah, that's a whole other, like, we can do a part 3. We probably actually have to do a part 3 already, but then that could just be that's a, what would be the opposite of a blooper reel? Because blooper reels are funny and actually fun to watch. This is like basically if you tried to stream the index section of something.
This is like streaming a funeral. Like it is really maudlin, and like no one is happy to be here, and no one is excited.
Yeah,
I've met very few people when they're like, very few people are excited to talk to me about stuff. Okay, so let's see. So we're coming up on an hour. We kind of waxed poetic for a while on this. Well, we probably missed a few questions in the chat. I do see one here about, hey, for Mindflip again, hey, would you include that tax advice about saving up like 30% of your income for paying off the IRS? So that's specifically
to self-employed individuals.
Yeah, and it's a tough benchmark because I would say if you're just getting started, you're the hybrid type, you have limited second job income, and you probably have enough expenses to offset it or put a serious dent into that income. I don't think you need to do 30%. If you are full-time and the self-employed activity is your full-time job, I would say yes, 30% is a good benchmark. Depending on your state, you may want to do more or less, right? Like, for example, Nevada, where I'm at, doesn't have state income tax. So I don't have to worry about that.
Yeah.
And yes, the goal of a tax office should be customer happiness. That's my goal. I mean, it's not my fault they owe money, but I want them to feel like, I'm their advocate and I've done everything to make them happy.
Yeah.
As we wait for more questions, Joel, can I give you some fun questions I've gotten from various DMs and stuff?
Sure, if you want to. I do have to say that, like, we probably are running out of, because I know this show is generally an hour, so we are running out of time. We will try to continue this and make this tax calculator available. I also hear my daughter crying, so I probably do have to go. But this is the 1040 here. So essentially, this Schedule C is step 1 that we talked about earlier. This is the profit or loss that you have to go through all this to figure out this number right here. Where is it? Tentative profit or losses, net profit or loss right here, line 31, right? So it says, if you have a profit entered on Schedule 1, 1040. If you have a loss, you must go to line 32, and then from there, then you have to do some other additional work, and then you eventually go back to line 1040. This is the step 1 for your figure out your business income. Step 2 then goes to your individual income tax return. We mentioned these statuses before: single, married filing jointly, married filing separately, head of household, qualifying. I guess there's qualifying widower, right? But like that's even less often. This is then where you fill in your demographic information, the back of the, look at this easy postcard now. And if you can't tell, we're a little bit jaded about that.
All they did was they sliced up the old form and put it on multiple pages and then added a few lines for new laws. They really didn't do anything.
No.
Demonstrable to make the return easier or harder.
It was smoke and mirrors. They made this shorter because they thought that would look better, when really they just moved stuff to another page. You still have to schedule this you still have to staple this to this, right? So
correct.
Here is then when you go into a net profit or loss from a business. That is, where do you enter it? So if we go down to here, line Schedule 1, go to line 12 of 1040. Line 12 is right here. What? Did I do something incorrect?
Wait, let me see. Sorry. I was tabbing through my other questions. Let me hop back.
If a profit enter on both Schedule 1 to 1040, line 12.
Yeah, so
but then this says,
so no. So in other words, what happens is there's a second filter. So if you have multiple Schedule Cs, they all show up on Schedule 1. And then Schedule 1 then flows to Form 1040.
Yeah.
So there's a separate schedule.
Let's go find out what
That
Schedule 1 is.
it's not great, Joel. I'm telling you, it's not a great change. Um,
So they're, yeah, like I said, like we said, they're just adding additional paperwork.
so that all rolls to line 12 there.
Yeah. Business income
Um,
or loss. Then you have
yep,
still have to attach Schedule C or Schedule C easy, and then
yep.
this gets attached to this, right?
And then that form, that number, so say you have two Schedule Cs, then rolls
Yeah.
up to the 1040 form.
Yeah. Where does it go on 1040?
Ba, 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 ba,
Right
ba.
here, adjusted gross income, otherwise subtract. Is that? No, Schedule 1. Add any amount right here, total income, add lines 1 through 5, add any amount from Schedule 1,
Yep,
line
that's where it
22.
is.
So they thought, okay, we're going to make it
They
easier by
buried it.
making everything smaller. So look how small it is. We just have one box right here, but then you had 2 pages of supporting documentation, at least 2 pages of supporting documentation that you had to file, right? So
It's
yeah,
not great. It's not great.
soapbox period ended.
So one question I got, so I'm going to try,
Yeah.
or unless you had other stuff, I'll transition into question and answer time, Joel.
Sure, yeah, let's go ahead.
Okay,
Yeah.
so I'm not making fun of anyone I've got a question
Yeah.
from. We're all at different education levels. I thought this was really cute, so I'm going to mention this. So this is from a message. Hey, I'm a recent affiliate and I need a lot of help. I'm 14-year-old and I don't have an SSN. How do I get one? I'm also a streamer. So that person, I said, that person, you already have an SSN. And so you talk with your parents.
How did they even fill out the affiliate paperwork if they didn't have an SSN? They had to do the tax interview.
Hey, listen, I'm
Yeah.
just glad that this teenager is taking a proactive
Yeah,
question.
kudos to that guy or girl
Mhm.
because they're actually being proactive. Like it's better than saying, "Hey, I'm a like 6-figure earning esports professional athlete. I didn't realize I need to pay income taxes every single year. What am I supposed to do?" Right? Yeah,
Mhm.
which we've gotten those too. So,
Yep.
yeah. So like that, I appreciate questions, and really the if you don't take anything away from this show, take this. The reason Ernest, Galen, and I do shows like this, and also why Hunter and Logo do shows on StreamerSquare, is because we want you to be comfortable asking questions. We're putting out educational content so you can inform yourself and figure out what you don't know, right? So like I know my colleagues and I talk about this a lot, and it comes up a lot. It's just when I graduated law school, when I passed the bar exam, and then started actual practice of law, the first thing I realized was how much I don't know, right? But at least I knew what I didn't know. The more dangerous thing is that if you don't know that you don't know something, right? So that's when people start being like they're assumed experts or anything else like that, but in reality, they are missing a whole other thing. We don't want that. We want you to we're putting information out there so you can at least figure out, hopefully, the ideal is that you are able to understand these forms better, understand these issues better, and ask the questions appropriately. If nothing else, we're giving you that information so you can figure out what you don't know and then who you can turn to in those situations. This tax calculator worksheet, this is not going to file your income taxes for you. Let me go ahead and state this right now. This is not something you submit to the IRS. This is to help you determine those numbers to get you all of the information here so you can figure out these forms either using, if you really want to, pen and paper, or just I would
No,
highly
don't do pen and
suggest,
paper. No,
yeah,
don't do it. Nope.
don't do
Nope.
it. Yeah.
No, I would never listen. We say a lot of like practical and technical advice. Don't do pen and paper.
Yeah.
Just don't.
So really, doing it either through, I mean, even all the states usually have e-file versions now, right? So you can, so either through TurboTax or some other similar tax software, or the best, what I would say is to hire Ernest and have him do it for you. Although he would always give you the advice, like, make sure it's something that your business can actually makes monetary sense, right?
Okay. So I hear Lydia getting rowdy. So I'm gonna read one more question and then see if we get any questions and chat in the interim.
Okay.
I have one question. But I currently have a full-time gig and game as a hobby, but recently I've been thinking about creating a channel for business purposes and revenue, dreaming to make it a full-time job one day. I would like to buy new equipment to start up, et cetera, et cetera, et cetera. Can I take off these expenses in year one? And the answer to that is yes. If your intent is for this to truly be a business and for you to make profit, then you can absolutely take it as an expense. There are some things called the hobby loss rules. And what that means is if you don't show income in 2 of the 5 years, you won't be in what's known as safe harbor. What that means is to be in safe harbor, there's no question you're allowed to take these expenses because you've showed losses. As long as you're trying to make a profit at this, then you're fine. But if you show losses and significant losses over a 5-year, 7-year time horizon, then you can be in some trouble with the IRS because they're going to try to reclassify your broadcast or stream as a hobby, and you're not allowed to take losses on hobby income or not hobby income, but as a hobby. So I see Joel stepped away for a second. Do we have any questions in the chat? So let's see. Any other questions? I'm going to scroll through here. Scroll up. Answered that one. No. Ah, there we go. Everyone say hi to Lydia in chat.
Yep. So this is Baby at Law. Yeah. So this is what allows me to file as, well, I guess I filed married filing jointly before this also, but this is what we call a dependent here in tax.
That's what gets you that sweet 2K tax credit.
Yeah. All right. Lydia, say hi. You can wave hi. Here. She was in the middle of eating dinner and was fussing because she didn't get all of her snacks. Lydia, do you want some cheese? Yeah. Yeah, that's what you think about the IRS too. Okay. So
that's what I think about the IRS.
Yeah.
All right. So we should probably wrap it up then. I didn't see any other question in the chat. So Joel, let's do our standard outro. Who are you and where can they find you?
I am Joel. I'm an attorney here in the Twitch space. I'm fortunate enough to work with Galen and Ernest in a professional capacity and also beyond just streamer space here. Oh, cool. I have my own command. Thank you. Yeah, so that is Your Brand, Your Business is a show that Galen, Ernest, and I have been working on for a while now. And the reason we were gracious enough to be Local graciously asked us to host this show here on your StreamerSquare. Right, so StreamerSquare's purpose is to provide educational content for content creators, self-employed individuals working within this video game industry, content creation space, and everything else. We want to, like I said earlier, make you comfortable asking questions. Yeah, I said hi. Make you comfortable asking questions so that you are not afraid to do these things, right? So the last thing that I really ever want to hear is that, like, I was so afraid of filing a tax return that I didn't do it. Yeah, exactly. So we want it to be something you're comfortable with, at least asking questions, so that you do these things and don't get in trouble with the IRS, because really that is not a favorable position for anybody. But that's where you can find me. Please go ahead and follow my Twitter and Twitch. Sometimes we do other shows, like, for example, that show that we did earlier was on that channel.
Yep. I am Ernest Jones. I'm a CPA that focuses on working with broadcasters, game devs, anything kind of adjacent to the industry. You can find my Twitter. It's posted in the chat, /Warbnull, because I refuse to give up the old gamer tag. And then next week, I believe, if the guest is still good, Gillen and I will be doing a show with a spouse of a broadcaster and kind of talking about kind of how that person has taken on the administrative burden and running the business and letting the talent be talent, and how that's been useful and a great boon to kind of the success of the channel and the brand. So hopefully that'll all go off. I think, knock on wood, pray for Galen, he'll actually get his PC back, and so he won't be so upset and angry. And so that'll be the show next week. So thanks for joining us, everybody, and we'll see you next time.